Picture a converted Victorian townhouse somewhere on the English coast, or a stone-built farmhouse at the edge of a market town in the Yorkshire Dales, or a quietly elegant Georgian property on a residential street in a cathedral city. The front door opens into a hallway with fresh flowers on a side table, the smell of coffee and toast drifting from the kitchen, a handwritten welcome card sitting on the reception desk, and a host who genuinely seems pleased you arrived. From the outside, owning a bed and breakfast looks like one of those rare business decisions where lifestyle ambition and commercial sense align almost perfectly. You buy a beautiful property. You welcome guests into your home. You cook breakfast in the morning, and the rooms pay the mortgage while you live somewhere you actually love. It sounds, in its most optimistic framing, like the business equivalent of having your cake and eating it. But the real economics underneath that welcome card are considerably more demanding, considerably more seasonal, and considerably more capital-intensive than the romantic version of the story suggests. Because a bed and breakfast is not really a lifestyle with income attached. It is a hospitality business running inside a residential property, with all the fixed costs of property ownership layered underneath all the variable pressures of a service business. Operating in a market where customer expectations have risen sharply. Online competition has intensified dramatically, and the margin between a viable operation and an exhausting one can be thinner than most prospective owners appreciate when they first fall in love with the idea. If you enjoy breakdowns like this that go beneath the surface and explain how money, business models, and ownership really work across Britain, follow Money Framework British now, because this channel is built for exactly this kind of analysis. The first economic reality of a bed and breakfast that separates it from almost every other small business is that the core asset, the property itself, is simultaneously the business premises, the owner's home, and the primary capital investment all at once. This creates a financial structure that is genuinely unusual. In most businesses, you separate the cost of your premises from your personal living costs. In a bed and breakfast, those two things are entangled in ways that make the true economics harder to read than they appear on the surface. The property has to be large enough to accommodate both the guest rooms and the owner's own living space. It has to be in a location that attracts enough visitor demand to fill those rooms regularly. It has to meet a standard of presentation that guests expect, which means ongoing investment in maintenance, decoration, furnishings, and facilities. And it typically has to carry the mortgage or acquisition cost of a property that, because it is both a home and a business, may cost considerably more than a purely residential purchase in the same area. That acquisition cost is the starting point for understanding the financial architecture of the whole model. A bed and breakfast property in an attractive location, whether that is a coastal town, a national park village, a historic city, or a popular rural destination, is rarely cheap. The combination of residential desirability, business potential, and often architectural character that makes a property suitable for a bed and breakfast also makes it attractive to buyers who simply want a family home. This means the market for bed and breakfast properties is genuinely competitive, and prices reflect that competition. A buyer is often paying a premium for location and character that goes beyond what the underlying business income alone would justify on a straightforward commercial valuation. This is important because it means the return on capital, measured as bed and breakfast income against the total price paid for the property, can look modest by purely financial standards, even when the business itself is running well. Once the property is acquired, the capital investment continues before the first guest checks in. Guest rooms need to be furnished, decorated, and equipped to a standard that meets modern expectations. Bathrooms, whether en suite or shared, need to function reliably and present well. bed linen, towels, toiletries, breakfast service equipment, and any in-room technology like television, Wi-Fi infrastructure, and USB charging points all represent costs. Common areas, including the dining room, hallway, sitting room, and garden, if offered, all need to be maintained at the standard the property is presenting to the market. A hospitality property cannot afford to look tired, dated, or poorly maintained without it showing immediately in reviews. And in the age of TripAdvisor, Google reviews, and Booking.com ratings, reviews are the primary commercial currency of any accommodation business. This brings up one of the most structurally important features of the modern bed and breakfast economy, which is the complete dominance of online reputation as a commercial driver. A bed and breakfast that was well regarded locally a generation ago could sustain itself partly through word of mouth, repeat visitors, and local tourism office recommendations. Today, those channels still exist and still matter, but they operate in the shadow of online review platforms that any potential guest can access instantly from anywhere in the world. A strong portfolio of recent, genuine, highly rated reviews is not a marketing nice-to-have. It is a core business asset. A cluster of mediocre or mixed reviews, particularly around cleanliness, breakfast quality, or host warmth, can suppress booking rates visibly and persistently. This means the owner is always, in effect, being evaluated by every guest, and the standard required to maintain strong ratings has risen as the market has become more competitive and as guest expectations have been shaped upward by exposure to higher quality accommodation options. The revenue model of a bed and breakfast is built primarily around room rate multiplied by occupancy rate. And understanding both sides of that equation is essential to understanding the economics. Room rate is what the owner can charge per night for each guest room. This is influenced by location desirability, seasonal demand, local competition, room quality, the overall reputation of the property, and the specific features offered such as sea views, rural outlook, en-suite facilities, or premium breakfast. In a highly sought-after location during peak season, room rates can be genuinely strong. In a less popular location or during the off-season, the same rooms may need to be priced considerably lower to attract bookings at all. The range between peak season and off-season rates in some British destinations is dramatic. And that range matters enormously because it means the business may generate the bulk of its annual revenue in a compressed period of months. Occupancy rate is the second half of the equation, and it is where the economics can become genuinely challenging. A bed and breakfast with 3 guest rooms that achieves full occupancy every night of the year would be an exceptional business. In reality, most bed and breakfasts experience significant variation in occupancy across the year. Summer school holidays may deliver near full occupancy. Bank holiday weekends in popular destinations can be strong. But November through February, in many British destinations, can see occupancy drop to levels that barely cover the daily cost of operating the property. Heating a large house through a cold winter, maintaining staffing or owner time for minimal bookings, paying fixed costs, including mortgage or loan repayments, insurance, council tax, utilities, and platform fees, regardless of how many rooms are occupied, creates a structural cost pressure during low season that the high season revenue must be strong enough to offset. This seasonal concentration of income creates a cash flow profile that is quite unlike a business generating consistent monthly revenue. The owner of a successful coastal bed and breakfast may accumulate meaningful cash reserves during July and August, and then spend the following months drawing down those reserves to cover ongoing costs through a quieter autumn and winter. Managing that cash cycle requires discipline and foresight. An owner who spends or withdraws too aggressively from strong season earnings can find themselves financially strained before the following busy season arrives. This is one reason why occupancy in the shoulder seasons March to May and September to October, matters so much strategically. Any booking that fills a room in a traditionally quieter month reduces the pressure on the high season to carry the entire annual cost base. The breakfast element deserves specific attention because it is where the bed and breakfast distinguishes itself from a self-catering cottage or a budget hotel, and where a meaningful proportion of the guest experience is either won or lost. A genuinely good breakfast, freshly prepared, thoughtfully presented, using quality local ingredients, can become one of the most powerful elements of the property's reputation. Guests who rave about breakfast in their reviews generate bookings. But breakfast is also a genuine operational cost. Ingredients must be purchased, often at retail or small wholesale prices, that do not give the economy of scale a hotel kitchen enjoys. Preparation time is real. Equipment including commercial-grade toasters, hot plates, coffee machines, and egg cooking equipment must be maintained. Food safety standards apply, including temperature control, allergen management, and appropriate hygiene. And the owner or a member of staff must be present and functional early every morning that guests are staying, regardless of what time those guests went to bed the night before. The labor structure of a bed and breakfast is another area where the economics are often underestimated by prospective owners. Many bed and breakfasts are run by owners who provide most of the labor themselves, which has the advantage of keeping wage costs low, but the disadvantage of creating a business that is deeply, personally demanding. Cleaning guest rooms thoroughly between checkouts takes time. Washing, drying, and pressing linen takes time. Preparing breakfast, serving it, clearing it, and cleaning the kitchen takes time. Responding to booking inquiries, managing online calendars across multiple platforms, handling reviews, maintaining the garden, dealing with maintenance issues, updating the website, and managing the administrative side of the business all take time. An owner who is running a 4-room bed and breakfast effectively has a job that starts when the first guest wakes and does not end until the last room is clean and the booking system is updated. This is not a complaint about the life. Many owners genuinely love it. But it is an economic reality that must be factored into any honest assessment of the returns the business generates. If the owner were to pay themselves a market wage for the hours they actually work, the net financial return of the business might look considerably less attractive than the gross revenue figure suggests. Bringing in paid staff changes the economics. A cleaner can reduce the owner's physical burden on changeover days. A part-time breakfast helper can ease the morning rush. But staff add wage cost, employer obligations, scheduling complexity, and management responsibility. For a small bed and breakfast with 3 or 4 rooms, the economics of paid staffing can be tight. Every pound spent on wages must be earned back through room revenue. And in a business where the daily revenue ceiling is determined by the number of rooms available, adding wage cost without adding capacity has direct implications for margin. Online booking platforms have transformed the market in ways that are both enabling and costly. Platforms including Booking.com, Airbnb, Expedia, and others give a small bed and breakfast immediate global visibility and access to a booking engine that would be impossible to replicate independently. A rural farmhouse bed and breakfast with a strong profile on these platforms can attract guests from across Britain and internationally who would never have discovered it through traditional advertising. But this visibility comes at a cost. Commission structures on major booking platforms typically take a percentage of each booking, which is an ongoing margin reduction on every reservation made through that channel. For a business already operating on modest net margins, that commission is meaningful. Many owners try to encourage direct bookings through their own website, loyalty, and guest relationships to reduce platform dependency. But achieving meaningful direct booking volume requires investment in a good website, search visibility, and the kind of reputation that makes guests confident booking without the platform's security and review infrastructure. Pricing strategy has become more sophisticated and more important as the market has evolved. Dynamic pricing, adjusting rates based on demand, competitor availability, local events, and seasonal patterns, is now standard practice among sophisticated accommodation operators. A bed and breakfast owner who sets their rates at the start of the year and leaves them unchanged regardless of what is happening in the local market is almost certainly leaving money on the table during high-demand periods. Using the pricing tools available through booking platforms, monitoring local competitor availability, and being responsive to demand signals can meaningfully improve annual revenue without adding a single room. This is one of those areas where operational intelligence translates directly into financial outcome. Regulation is another layer of the business that new entrants sometimes underestimate. Running a bed and breakfast typically requires registration with the local council. Fire safety regulations apply, often requiring risk assessments, appropriate fire detection and suppression equipment, escape route signage, and potentially structural modifications depending on the property layout. Gas safety and electrical safety checks are legal requirements. Planning permission may be required in some cases, particularly if the property is being changed from purely residential use. Food hygiene standards apply to the breakfast operation. Liability insurance is essential. These are not optional considerations. They are legal obligations that carry real cost and real consequences if neglected. There is also the matter of ongoing property maintenance, which in an older or character property can be particularly demanding. The kind of Victorian terrace, Georgian townhouse, or stone-built country property that makes an attractive bed and breakfast is also typically a property that requires consistent investment to maintain. Roofs, windows, heating systems, plumbing, and period features all need attention. In a business where the physical presentation of the property is central to the product being sold, deferred maintenance is not an invisible saving. It shows in the rooms, in the guest experience, and eventually in the reviews. The capital requirement for ongoing maintenance is therefore not optional overhead that can be deferred indefinitely. It is a genuine, recurring cost of maintaining the quality on which the business's reputation and revenue depend. For all of those challenges, successful bed and breakfasts do exist across Britain in considerable numbers, and they succeed for identifiable reasons. Strong location, genuine and consistent hospitality, high-quality breakfast, excellent online review management, smart seasonal pricing, and a clear sense of the type of guest the property is trying to attract all contribute. The bed and breakfast that knows its market, whether that is walking and cycling tourists, heritage visitors, business travelers in a market town, wedding guests at nearby venues, or families exploring a national park, and that configures its offering specifically for that market, tends to perform considerably better than one trying to appeal to everyone vaguely. Direct repeat business and word of mouth remain powerful even in the digital age. A guest who has a genuinely excellent stay and tells friends, who tell friends, who leave reviews, who generate more bookings, represents the kind of organic growth that costs nothing beyond the quality of the experience itself. This is where the deeply personal nature of the bed and breakfast model can be a genuine advantage over larger, more corporate accommodation. The host who remembers a guest's dietary preference from a previous stay, who leaves a thoughtful local recommendation on the welcome card, who goes slightly beyond what was expected, creates the kind of memory that generates both repeat bookings and enthusiastic recommendation. That personal dimension is both the most appealing part of the business and one of its most durable commercial assets. So how does the money flow in plain mechanical terms once you look past the charming exterior and the smell of breakfast? Revenue comes primarily from room bookings, potentially supplemented by any additional offerings such as packed lunches, afternoon teas, special occasion packages, or private hire of the property for events. From that revenue, the owner covers booking platform commissions, food and consumable costs for breakfast and room supplies, utility costs, including heating, water, and electricity across a large residential property, insurance, council tax on the commercial portion of the property, any mortgage or loan repayment, maintenance and redecoration costs, laundry and linen costs, any paid staff, marketing, including website hosting and photography, and the administrative cost of running the business. What remains is the owner's return, from which their own drawings come, and from which any reinvestment in the property is funded. In a well-positioned property with strong occupancy in a popular destination, that return can support a comfortable lifestyle, particularly for owners who have significant equity in the property and therefore carry modest debt. In a property with higher borrowing, weaker seasonal demand, or a location that does not generate sufficient year-round bookings, the same cost structure can produce a result that is financially tighter than the lifestyle appeal of the business suggested when the decision was made to buy it. The bed and breakfast therefore represents one of the most instructive examples in British small business of the gap between what a business looks like from the guest's chair and what it actually demands of the person providing the experience. It looks warm, peaceful, and personal, and it genuinely can be all of those things. But it is also a capital-intensive property business, a hospitality operation with demanding quality standards, a seasonal cash flow challenge, a labor-intensive service with the owner at the center, and a business that now operates in a transparent, review-driven, platform-mediated marketplace where reputation must be actively managed and consistently earned. The owners who make it work, and many do, are not simply people who loved a beautiful house and wanted to share it. They are people who understood the economics well enough to choose the right property, price it intelligently, maintain it consistently, serve guests exceptionally, and manage the business with enough financial discipline to sustain something that feels personal and warm, even when the spreadsheet behind it is being watched carefully. If you want more deep dives into how British businesses, assets, and ownership models really work beneath the surface, follow Money Framework British and turn on notifications so you never miss the next breakdown.